Internal Revenue Service IRS Tax News. IRS announces rollover relief for required minimum distributions from retirement accounts that were waived under the CARES Act. IR 2020-127, June 23, 2020, Washington. The Internal Revenue Service announced that anyone who already took a required minimum distribution in 2020 from certain retirement accounts now has the opportunity to roll the funds back into a retirement account following the CARES Act RMD waiver for 2020. So the required minimum distributions typically have to do with a retirement account like an IRA or a retirement account related to the work like a 401k or something like that. Accounts where you typically have a benefit when you put the money into the retirement accounts, a tax break. So you basically have a deferral when you put the money in. And then the IRS, because you get the tax break, it's really a deferral. When you take the money out, usually at retirement, then you're taxed on it at that point in time. Because the IRS wants to tax you at some point in time, they typically will require minimum distributions at some point when you're over a certain age. And when you pull the money out, then you're taxed at that point in time, typically. So they're saying now that if you pull the money out, you may be able to put it back into a retirement account if you already pulled the money out, at which point, meaning that you may not be subject to the taxes related to it if you put the money back into the retirement account. Back to the text. The 60-day rollover period for any RMDs, which is the required minimum payments, required minimum distributions, already taken this year has been extended to August 31st, 2020 to give taxpayers time to take advantage of this opportunity. The IRS distributed this change in Notice 2020-51. There's a PDF link to that here, released today. The notice also answers questions regarding the waiver of RMDs for 2020 under the Coronavirus Aid, Relief, and Economic Securities Act, known as the CARES Act. The CARES Act enables any taxpayer with an RMD due in 2020 from a defined contribution retirement plan, including a 401k, or 403b plan, or an IRA, to skip those RMDs this year. Now again, why would you want to skip the required minimum payments? Because if you don't take the money out, if you don't need the money, then you don't want to take the money out of the retirement. You'd like to take it from somewhere else, possibly if you have some other type of investment, because when you take it out of the retirement account, it's going to be included in taxable income, increase in the taxable income. So if you're allowed to basically keep it in there, then you don't have to trigger the tax, and you can keep on going with a deferral, which was the point kind of in the first place. Back to the text. This concludes anyone who turned age 70 and a half in 2019 and would have had to take this first RMD, required minimum distribution, by April 1st, 2020. So typically this is triggered by, of course, the age requirement. So the IRS is saying, hey, we've given you a deferral for 30 years or whatever since you put this thing in there. You're 70 and a half. We want you to start taking it out now. We want to start collecting the tax on this income that we never got to get our share from. So back to the text. This waiver does not apply to defined benefit plans. So in addition to the rollover opportunity, an IRA, and just note that that's basically what they're trying to waive now. So they typically, the IRS general rule says, hey, I want to take it out. Start to take it out, have minimum distributions at 70 and a half, and they're basically saying that you may be able to skip those due to the CARES Act, and if you've taken money out already due to the required minimum distributions, you may be able to put it back into some type of retirement account and therefore not have to include it in income and pay taxes related to pulling it out. Back to the text. In addition to the rollover opportunity, the IRA owner or beneficiary who already received a distribution from an IRA of an amount that would have been an RMD in 2020 can repay the distribution to the IRA by August 31st, 2020. So note the deadline, August 31st, 2020. The notice provides that this repayment is not subject to the one rollover per 12-month period, a limitation and restriction on the rollovers for inherited IRAs. So they're going to basically give you an opportunity if you got the RMD, required minimum payment, and you took it out, but you didn't want it, you don't want to trigger the taxes, to put it back in without basically having an effect on, the number of rollovers basically that could impact other tax decisions. So that's a good thing. So back to the text. The notice provides two simple amendments that employers may adopt to give plan participants and beneficiaries whose RMDs are waived a choice as to whether or not to receive the waived RMDs.